Hey everybody, welcome back to Trades and Gains. I'm your host, Max Pitts, and it looks like it's time to buckle up because this week is packed with market-shaking news. We have big tech earnings, a pivotal Federal Reserve meeting, and President Trump's first full week back in office. Oh, and by the way, let's not forget about the S&P just had its best first week under a new president since Reagan in 1985. What could possibly go wrong, right? But let's dive into what you need to know and stay ahead of the curve coming the week ahead. Now, to kick things off, Trump's back. Or wait, we're not there yet. Hold on. Big tech earnings, is this going to be a make or break for the market? This week is a big tech bonanza. 4 of the Magnificent 7, Meta, Microsoft, Apple, and Tesla, are all reporting earnings. Now, why does this matter? These giants are expected to grow earnings by a staggering 21.7% this quarter, compared to 9.7% for the rest of the S&P 500. But here's the catch. Big tech has been carrying the market, but any sign of weakness could derail the rally. Meta and Microsoft report on Wednesday, followed by Apple and Tesla on Thursday. Expect some market fireworks and potentially cue the champagne and filet mignons, baby. And guess what? Trump is back, and let's just say he's not easing into his second term. His first week has been a wild ride for the markets. First, he announced a $500 billion AI investment initiative, boosting stocks like Oracle, Microsoft, and even Nvidia. He also hinted at tariffs for companies not manufacturing in the US, a move that has inflation watchers sweating. And finally, at Davos, he said he'll demand an immediate interest rate cut and pressure OPEC to lower oil prices. Our translation for all this, by the way, is Trump is putting himself as the center of the economic narrative, and the markets are hanging on his every word. Now, talking about the Federal Reserve, they are meeting on Wednesday. And while they're expected to keep rates steady, all eyes will be on Chair Jay Powell's press conference. And here's why. Inflation is cooling, but wage growth and Trump's tariff threats could complicate things. And Powell will likely play it safe, but as JP Morgan's Michael Ferroli put it, this could be a duck and cover press conference, given all the noise from Trump and the upcoming economic data. If Powell goes too dovish or too hawkish, expect the markets to react fast and briskly. Now, we've also got some heavy-hitting data that is going to hit the tape this week as well. We have Q4 GDP numbers, which are going to drop on Thursday, and we have expected growth at 2.6%, which is down from the previous 3.1% reported for Q3. Friday is going to bring in the core PCE inflation report, the Fed's preferred metric, with expectations at 2.8% year over year. Still very far from that 2% goal, mind you. Combine these reports with Trump's policies, and the Fed might find itself playing third fiddle to market forces. Now, this is what we're going to watch for this week, and this is what you need to keep an eye on. Number 1 is tech earnings. If big tech stumbles, the market rally could lose steam here. Trump policies, any tariff announcements or aggressive rhetoric could spook investors and the market. And the Fed's messaging, finally. Even a slight shift in tone could impact market sentiment overall. The stakes are high this week. Whether you're a trader, investor, or just a market watcher, now is not the time to look away. So what do you think? Will big tech keep the rally alive? Will Trump's policies throw a wrench into the markets? And can the Fed keep things steady? Let me know in the comments below. And don't forget to like, subscribe, and hit that bell so you don't miss next week's market breakdown, as we'll have some earnings reports, data dumps that we'll dive into, and other news stories that we will be breaking as well. As always, stay sharp, stay invested, and follow the money. I will see you guys in the next episode.